So SPY moved up today. It had a very nice move on the day. I own those 100 shares, and the question is, was I able to sell that call or not? Hello, my friends, this is Legend. So today, SPY did move up. It had a very nice move. It went up $4.95 just today. Now that had a closing price of about $689.43. And as you can see, I did have my upper line drawn and my lower line drawn. And let's get a better view by looking at that 5-minute chart. All right, so here we are on that 5-minute chart. And you can see right there, there's the green line. That's the upper line I had drawn in this morning. And this red line, that's the lower line that I drew in as well. I was looking for SPY to break above this line, and then I would be looking to try to sell that call above there, as I do own those shares at 686. Now it shows that I own them at 684.25 because I have been earning premium on other option plays that I've been doing on SPY. Now I will say that if I had saw this candle here go all the way up to as high as 689.39 right here, I could have definitely been able to make some good premium on that call. As I believe at this point, I could have earned about $1.70 for a 690 call that would expire the same day. But I did not catch this candle here. It actually started coming back down, and it went back down below that high, and that's that green line that I've got right here. And as you can see, it was having a tough time to break past it, and eventually it did. And then it was using it as a support line right here. So I went ahead and I tried to sell a call on SPY, and I had a strike of 690. And I wanted about $1 for this for the day, right? So I put in $1.11. And I was hoping that it was going to bounce off of this high right here and then start moving up and potentially break this high that we had on this candle of 689.39. Because if we could have done that, that option play that I had that I was trying to get filled would have been filled, because I saw that it got as high as about 93 cents before it started losing steam and then coming back down, and therefore the premium for that option did start decreasing. I did not bring my premium down because I figured if it was going to get there, fine, I would sell that call at 690, earn a little over $1 for that play, but I was not going to chase it. The main reason that I'm not chasing it is because if we take a look at that full 1-year chart, and there you go, that 1-year chart, you can see it's moving up over that 1 year. If we look at that 5-year chart, you can see it's moving up over that 5 years. So I am not going to chase this, because if it's not going to fill on my strike, then I'm just going to wait for it to give me another opportunity, and maybe I'll even make more price appreciation when that one fills. Now that's not guaranteed, as we don't know what the price will be the next day, but overall, in my opinion, SPY likes to move up and to the right. And even if we look at the smaller time frames, there's a 5-day, as you can see, 5 days, it's moved up. 3 months, it's moved up. 6 months, it's moved up. Of course, the 1 year, it's moved up. And like we said before, the 5 years, it's moved up. So even if it does pull back like it did right here, I'm not worried, because overall, this wants to move up. I just have to be patient. Now, of course, if I would have had lowered my premium or even picked a lower strike price, I could have got it filled. But as you can see, it did close at 689.43. And if those shares would have been taken away, as long as I sold that call above 686, then I would make additional price appreciation on top of the premium. And that's how I'm playing these for SPY. But I am not going to chase it because, as you can see, if this thing can get back up to 695 or so, I would love to get a $9 move or a $10 move on SPY and earn premium. Yes, sir. I'll take that all day long. So we are having a bit of a move up on SPY, and I'm hoping come next week we can continue this little trend and keep moving up. And hopefully I'll be able to sell my call at an even higher strike price, earn that premium, and potentially have my shares taken away at an even higher price. I don't want to be too greedy with it because I do want to get my options filled so that I can earn that premium. But for today, it just got really close to getting filled, but it just could not make it. But that's okay. Like I said, I'm not going to chase it. I'm just going to be patient and wait for it to come to me. For another play that I've been working with is CRDO. And this is CRDO. I had those 100 shares and I had that call that I did sell at 131. You can see right there it is, $131 call that expires today. And this is after hours, and you can see that CRDO did not get up to that price. As you can see, CRDO closed below 131. So my shares at the moment should be safe and I still own the 100 shares. Now, how high did it make it today? Well, if we hover over the candle, you can see the high for today was 131.98. It was challenging that sold call at some point today, but it just could not hold above it and fell back down a little. Now, I could have rolled this one if I so choose, but it was going to require about $10 to close this one, and then I would roll it to a new strike, which would then pay me additional premium. And we can look at the options chain to explain what I mean. And here we are. This 131, as you can see, there's that -1. So I had a sold call for this one. And this is the call side. This side over here, this is the put side, as you can see at the top up here. So I had a $131 strike for a sold call on CRDO. But to roll it, I have to buy to close this one, and then I would pick a further out strike, and then whatever premium that was actually paying, I would make the difference. But as you can see, even at the end of the day, it was still roughly about $10 to close it. And I just did not want to pay it, right? Because it's the last day. I can't really do much. I could have rolled it, but that's about it. So what I did is I just let it sit. It'll expire worthless as long as CRDO does not all of a sudden jump above 131 after hours. But it's only got a few minutes left to get there, if it were to get there, because it only has, I believe, until about 5:30 to make that move on the expiration date. And as you can see, currently it's at 124.45. So I believe my shares are safe. So I will keep those 100 shares, and the buy price that I own those at is at 129. So as long as I sell it above 129, I am making price appreciation on top of the premium. But say I was to roll it. Well, like I said, I would have to pay that $10 to close the current option that I had sold at that 131. And then I would need to select a further out strike. So say I went 1 week out to February 27th. We'll take a look at that. Scroll right on down. And you can see, even if I pick that same strike, $131, that mid price for that was about $3.25. Wow. But now I have to pay the $10 to close the previous. So I would potentially be able to make about $315 just to roll it. And maybe I should have done that, right? Maybe I should have. But we'll see what Monday brings, because if CRDO does move up, then that premium is also going to increase. I wasn't too crazy about, first of all, paying that $10 to close it. even at the end of the day to even roll it. But I also wasn't too crazy about rolling it on a call when we're having a red day. As you can see, it did drop $6.60. I would much rather sell that call on a green day. Now, had today been a green day, then I would have probably looked at maybe rolling this out 1 week, as that premium would have even been a little bit more possibly. But honestly, $3 in a week, even on that roll, wow. Kind of thinking maybe I should have, right? But we'll find out on Monday. Monday, I'll take a look at this as my current option play will expire worthless. That will then be removed and the shares will be put back into my account. That will not be held as collateral for covering this 131 sold call. So next week, I'll look to actually sell another call on CRDO. And as long as I sell it above the 129, I will make price appreciation. So as you can see, CRDO, it's not too expensive, right? It's $124. That's still about $12,000. So that's not really cheap, but it has some good premium. And if we look at the overall stock chart, there's the 1-year chart, and then there's the 5-year chart. So it is up on all those charts, but CRDO itself is not as safe as some of your larger companies, right? I don't think I would put it in the same category as like SPY or even Microsoft or something like that. This one here, I see it as a bit more risky, just simply because before this move, it was sitting at around this $7 to $14 range, right? And now we're at 124. So there is quite a bit of risk here on CRDO. But for SPY, I'm good at whatever, because SPY overall, even if we go all the way out to the max, and that's the max for the chart for SPY, and this is going all the way back to 1993, you can see, look at this, up, right? It has done nothing but go up. It has had pullbacks, plenty of them, right? But overall, this moves up and to the right. So that's why, in my opinion, I can't go wrong with SPY. But CRDO is a little bit of a different animal. You cannot treat it the same as SPY. Now let's take a look at my covered call tracker sheet that I have been working on. And if you've watched a previous video, you saw where I closed out CRDO and opened this new CRDO. So we can go in and close this CRDO right here, as this one will expire worthless. And that way next week, I'll be ready to enter in the new covered call on CRDO if we get a good green day next week. So let's go ahead and close the current one right here. So we're just going to flip this from open to closed. And the closed date, that's going to be today, 2/20. The premium to close, well, I did not roll it and I did not close it. It will close and it will expire worthless. So therefore it does not cost me anything. So that's a 0. And the fees to close right here, that's going to be a 0 as well. Now, were my shares called away? Well, it closed under my strike. So no, they were not. Boom. There we go. So I earned $214.94 off of this play, and I earned 1.67% on this play, and that's a projected 3.9% per week. And of course, if you want to project that out to a full month, that's 16.89% in a month. That's some good money. And the other one that we have open here is this TJX. As you can see, it was expiring today as well. For this one, I ended up rolling it. And here you can see where I did roll TJX. It cost me 17 cents to roll this one. So I can enter that in as the cost to roll it. And then I can enter in my new strike and new expiration date. As that strike, I moved it from 145 to 146. And that expiration, which was expiring today, February the 20th, will move to March the 6th. So I moved it out 2 weeks and I just increased my price appreciation by $1, or times 100 would be $100. So let's enter this into that spreadsheet and let's open that new trade on my spreadsheet. Okay, we're back on my cover call tracker, and this is for the TJX. This one will also be closed because you have to buy to close, right? Because I'm going to close that leg, and the close date will be today. And the premium I paid, remember, was 17 cents. And the fees on that will be 11 cents, as that's shown for the fees for making that trade. Were my shares taken away? They were not, because I rolled it. So as you can see on that position, I made $322.83. That's a 2.21% on that play, with a projected monthly of 3.05%. Very nice. I love it whenever I can make at least 3% in a month, because if you project that out over a year, that's 36% in a year on your money. And that is some good money. Now, that is the closed position, but we have to show the new opened position, right? So we're going to use today's date as that entry, right? Because today's the date that I did roll it. So 2/20. This is for TJX. My purchase price, well, that doesn't change because I own those shares at 146.25. It's a covered call, and I have a strike of 146. Now, you may look and you'll ask, well, why are you selling your shares under what you paid for it? Well, yes, that is costing me, right? Because the original one was 145 and I owned them at 136.25. But I earned $3.40. And if those shares were taken away, then that $1.25 would basically be taken out of that $3.40 that I did make. And then that difference would have been what I actually made. So even though I did sell them under my purchase price, my premium I earned covered that difference plus some, okay? So that's kind of just what I did for this one. And as you can see, when I did roll it, I ended up moving it from 145 to 146. So it's still 25 cents under on the purchase price portion. Even if I can roll it once again to 147 in a couple weeks, then I will be above my purchase price. And then if it is still above it, I can let those shares go, earn a little price appreciation, plus all the premium I have been earning over the time. So that strike price of 146 is the new strike, and that expiration date that I did select is March the 6th. Now, I did not earn a whole lot of premium on this because I was looking just to get that extra $1 price appreciation, okay? So I am rolling it from that 145 to 146. So that's $100 in my pocket if it does close above that 146. So that's an extra $100 in my pocket, plus the premium I earned back here, which was $340, plus the premium I did earn for rolling this one. But since I did roll it up $1, that does come out of that premium, and therefore that premium was a little on the lower side, right? It was only 17 cents, and the fees would be 6 cents here. And it's one contract. Now, one thing I do want to correct is because that is a roll, it does give me a total of 11 cents to roll it. So what I'm going to do is I'm going to split that fee between opening this sell call here and closing the previous sold call. So the total was 11 cent fee. So what I'm going to do is subtract 6 from that 11. That gives me 5 cents. So I'm going to change this fee up here from 11 to 0.05. I hope that makes sense. So that just gave me a little bit more on that one. But that total fee for that roll was 11 cents. And I'm splitting it between the two trades. 5 cents to close the original and 6 cents to open the new one. So now we can actually go in here and we can turn these fields here to green as those are closed. And that way I'll be ready come Monday. Hopefully we get a green day on CRDO and I can sell another call on CRDO, make some more premium, and continue on. So that's just some of the plays that I am making. And even if it is a down day, as you can see, I can still turn it around and make some money, whether it's selling my covered calls, buying leaps, and eventually I'm going to be looking into some bear call spreads. So if you'd like to get information or notified whenever I actually make my trades, come on over, join the Discord, where I do let my members know when I'm selling my calls, selling my puts, or whatever moves I'm making, whether it's on SPY, CRDO, TJX, IBM, or whatever. I do notify my members, so come on over, join the Discord so that you can get those notifications when I make my trades. The link to my Discord will be down in the pinned comments and in the descriptions below. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button and smash the like button, as it would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.